anyone like to? No, you don't like to close late. Weird, right? Like it's the worst conversation to have, and like lose deals, all of that, right? So we're going to talk about some of these statistics, but our average clear to close time is 12.5 days with UWM. So speed is awesome. I've talked to some of you, Corey. I mean, you were raving about UWM before this meeting, right? So a lot of really good opportunities. So we're going to talk about where we're going to see rates, where we're going to see the housing market specifically in Utah in 2022, what's going on nationwide. So that as you're talking, my hope for today is as you're out with clients, that you never lose a deal due to inability to get them funded, right? So knowing a little bit about mortgage options, creativity, getting rid of mortgage insurance with 10.01% down. There's some really neat things that we can do because of United Wholesale Mortgage to make sure we're winning more in 2022 together. So I'll introduce Jake Hamilton and Chris Parker, and they'll go through their presentation. They flew in from Michigan to meet with us. Yeah, turn the time over to you.
Nice to meet everybody. Thank you so much for having us. I'm Chris. I'm the Director of National Accounts at UWM. I oversee 100 of our top 200 partners, work strategy consulting capacity with them, but I work with account executives, key account executives like Jake, who's one of the absolute best guys in the industry. And he introduced me to Josh after we've been working out here for a while with some other brokers. And we're really excited to have this opportunity to be here with you today and really educate you a little bit more on what not just Josh brings to the table, brokers bring to the table, but ultimately make sure you understand just what it is we do that allows us to be who we are, because it's really not about us, it's about you. It always has been. We have zero retail presence whatsoever. So what you need is what we invest in. So Jake, I'll let you start.
Yeah, absolutely. And just to piggyback on that, in a market where it's where it's ever growing and especially diversifying, we don't know what 2022 really is going to look like. But I mean, Josh does an amazing job. You know, I'm so happy and proud to partner with him on everything that we do. And obviously being backed by the #1 purchase money lender in the industry, which is UWM. I mean, we closed more purchases than anybody else, and we close them quicker, we close them more efficient, but it's all because of Josh's team. And we got Oscar back there.
I'm so sorry. Yeah,
It's
I want to
okay.
introduce you guys to Oscar as well. So Oscar's my loan partner. So he's from England. So he has the coolest accent in the world. So like people are like, hey, can you put Oscar on the phone? I don't want to talk to you. So
Oscar is the sale. Oscar is the whole.
Totally.
Like he's
Yeah.
everything.
Good
Actually,
looking and a voice. It's fantastic.
The slide deck is actually just pictures of him.
I got some voice recordings.
Like voiceovers.
I was actually going to have him be me today. Like I was just going to hide and pretend I was just here, and Oscar was going to be me. So we can jump into it. Do I just clear this?
sorry, my clicker is
Oh no, you're totally fine.
Yeah.
Did it stick together?
It kind of overlap, but whatever.
So it's all about partnering with Josh, your mortgage guy, right? So we're always the back end, we're the cheerleader, and you will never really see UWM on any of the transactions, like as far as a client facing, anything like that. It's all going back to branding you guys, branding Josh, and this is the reason why. So transitioning from LTS to Ultimate Home Lending, I mean, these are some things that they've already accomplished, right? So top 1% in Utah. I mean, you can see all of those are purchase, clear to close is up there, 0 days, 1 days, 3 days. I mean, we get appraisal waivers on purchases. There's so many different ways that partnering with Josh and with Ultimate Home Lending, I mean, they just do such an amazing job. And I mean, they're always a top 100 client of ours every single year. And they provide the absolute best experience to every single one of their borrowers. And that's just by using all the tools and technology. And again, making it all about you guys and client facing for you to prop you out and grow your brand while we just stand in the back.
Well, right. So I guess we'll start to jump into it a little bit. And I think the intro slides after here, because I thought Josh was going to talk through slides, but let's talk about 2022. Okay. And kind of what we're seeing and understanding the market's going to do. We're already starting to feel a little bit of what that is, right? We've been through, I don't know, they're running out of words to describe the last like 2 years. It's you know, choose your own adventure as far as that's concerned. But you know, some of, yeah, no, that, I think that's the scientific term, right? Yeah. So,
Politically correct.
you know, first and foremost, inventory has been one of the biggest issues that we've been dealing with in general, and it's still going to be an issue. We, you know, got builders in the room, housing starts, new construction, they are going to finally start to really get back to normal. Believe it or not, it's way better out here in Utah than it is in Michigan, because new home construction is like, you know, inverted back in Michigan right now, it seems like. But nationwide, it's something that stagnated due to supply chain issues, right? It will help, but it won't necessarily offset the inventory shortage. So it's still going to be a seller's market. It's going to be extremely competitive. So you need to have a competitive partner who's going to allow you to get offers in quick and confidently, right? Interest rates are projected to go up. How much is, I mean, it's always a coin flip. Tomorrow they could be up, you know, half a point. You don't know. Right now, they're still low threes, high twos in general. You know, most people are locking in that, you know, mid low threes range. Odds are we're going to be talking about around 4% by the end of next year, with some bubbles here and there because the Fed is going to ease their MBS, you know, purchases. Again, we don't know what that'll lead to. They change policies all the time. They do what they need to make sure that the economy doesn't, you know, just tailspin. With that in mind, work from home is something that drove a lot of what happened last year. And so we're expecting values to somewhat stabilize. Not necessarily as much here in your market. We are going to see a heavy demand still, you know, throughout, you know, the Wasatch Front, through, you know, Salt Lake, everywhere around here in Utah. We're projecting to see values continue to climb a bit. And we're going to, you know, we've seen some stabilization recently, at least on our transactions, in terms of where appraised values are coming in. But when we spin back around here to spring and purchase season really heats up, odds are you're going to see that tick back up. So affordability is going to be a big component of what we're fixated on in investing in. And then innovation is going to be a big part of this too. Now that, you know, the market is stabilized, the secondary market is getting inventive and creative. There's a full head of steam behind the PLS market, driving new product lines that haven't existed in years, and some really interesting stuff that a lot of, you know, lenders like UWM in particular out at the forefront of that you guys are going to have access to through Josh and his team, and in a way that really, quite frankly, has not been done before, because who we are as a lender is a little different, right? We're a mortgage lender, yeah, but really what we're in the business of doing is manufacturing time, right? We are invested purely in our partners' success, making things faster, easier, and cheaper. And, you know, not to get, you know, make it sound like a rap song or something, but it's about control, consistency, and communication too. So we want to make sure that those are the things that we're giving to not just Josh, but to you, to everybody that partners with the mortgage broker. So let's see here. All right, so affordability. All right, let's talk about that. This is supposed to look kind of ugly. These are all stats from NAR, but it's a little overwhelming when you think about the context of what everybody's been through. But we're still projecting 31% of, you know, buyers are going to be first-time home buyers over the next year. And within that sector, 28% are going to need a gift for their down payment because rent is really high. The guy in New York who wore like a wizard hat, you know, I don't know if you remember him, the rent's too damn high. He was right. But student loan debt's, you know, a real thing, and childcare expenses aren't getting any cheaper with COVID. 33% of buyers in general have children under 18 in their home, and that's one of the drivers of them looking to buy a home, get out from their rent. Now you think about that, 79% of all purchases are 95% of asking or higher in the residential market right now. That's super competitive. So you need to have a partner who can provide you with a platform to execute on what you're offering when you're trying to get into contract here.
Can I just ask a question for the group? Are you guys seeing like what kind of close times are you needing to win deals right now to be super competitive?
It depends on the type of transaction.
Right. Yeah.
A lot of them like 2 to 3 weeks, if you can give that to them. That's the one that got me.
So 21 days still
Or less. A purchase for mine was on, we got the clients, we sold their condo and got them into their new home. What got me the deal with the agent was a lease back as well as a close in less than 21 days, which we did in 14.
Awesome. That's good, Connor. Anything else like with close times or anything like that? Still, so 21 days is still pretty okay. Awesome.
Perfect.
Good to know.
So speed is a big part of why Josh stuck with Ultimate Home Lending. This is a group of people that formed based on, kind of this common thread of understanding what matters most to them and their clients and their, partners is speed. It's execution on the process and something that's replicable, scalable, and consistent that they can depend on. It's affordability. It's being able to perform in a way that allows people to achieve their goals, because you're in the business of making dreams come true, right? I know that sounds a little altruistic, but it's a fact. The best days of my life is when I bought a home. And it was simply because I finally felt a little settled and I knew that my family was going to be there. That's where it was going to start. And that's what people, almost push aside while they're looking for this opportunity. And making that achievable in a market where values appreciate the way they are is critical right now. More than ever, we need positivity in the world. And then service, right? The common thread with the people Josh has partnered with and with UWM, we believe in proactive, clear communication and service that suits you. You shouldn't have to chase around an LO. You shouldn't have to want to know what's going on. You should be able to know what's going to happen. And you should be able to find out if something's going wrong. And we should be able to go ahead and tell you, here's what we're going to do. And that's what our entire platform is built around. Josh has access to a dedicated underwriting team. We've got Oscar, who's one of the best LOAs in the country and best kept secrets as well. So sorry, I think this is being broadcast. But in conjunction with that dedicated underwriting team, it's not like anywhere else. He can talk to all those underwriters. They can troubleshoot. They can figure out what's needed. As an LO, I've been in the industry for 15 years. I could never speak with an underwriter, period. And if I did, I was risking my job a lot of times. They don't have time, they don't care, and nobody wants you interfering with the work they're doing. Our team is specifically set up so that they call out on every single touch of the file and communicate anything they did. So if they touch something and it creates an additional need, they're explaining why. And that gives Josh the opportunity, or Oscar the opportunity to go, oh yeah, well that was over here. And they'll go, oh, okay, and clear it off. So you keep things moving. It's not just this black hole that's synonymous with, the mortgage underwriting process anymore. And then technology. We're a mortgage lender. We're really a technology company at the end of the day. That's how we manufacture time. He has access to cutting edge technology that's driven to make things simple. It's just that. I mean, we've got a Domino's pizza tracker for a mortgage, right? It's white label. We don't exist anywhere, but just to know where you're at without having to do anything with the click of a button is something so just matter of fact, duh. It blows my mind that people still haven't invested in it, that, consider themselves to be competitive.
Yeah, so with their UTrack product, you can actually, we'll register you as the realtor. So communication that goes out has your name at the top. You can check status of every loan that we're working on together, so that, we're not playing phone tag 3 or 4 times to try and find out where the status is, right? So you have an app, you can check every loan's status. We're clear to close if the appraisal's been approved or not yet, all of those things. So it's a really nice technology piece to save us all a lot of time.
Right, which all goes back to the service piece too, because if you guys are chasing Josh is chasing me, and if he's chasing my underwriters, he's chasing me. So, I mean, we even have, out of 9,000 people at our company, we have a policy, no call left behind. It sounds absolutely ridiculous, but trust me, it is as real as it could possibly get. If our phone rings, if you're not at your desk, the person next to you has, the underwriters, the person next to you is answering the phone, the processor assist team, someone's always there to pick up and be able to communicate with Josh. And if, you guys know how this industry works. Problems arise at any point in time, right? So being able to quickly and efficiently get somebody on the phone, talk it through, or escalate it through the system within hours, right? That all goes back to the service piece to keep all of you front end focused and not stepping backwards to worry about one transaction. Where is it at, right? He's communicating with you. He's not worried about it because he's being communicated with. So going forward, I mean, it just makes everything so much more streamlined to keep everybody out on the forefront, getting new business, new relationships, able to make it to those top golf events, not having those sleepless nights, You guys have all had those where you're going to bed and you're I can't sleep. I can't tell you how many times people are I can't sleep, Jake. I gotta know what's going on with this loan. So that's not something you guys are ever gonna run into while working with Josh.
So going back to Josh hit on speed wins, right? We want to provide a platform for your buyers to compete with cash. It's that simple. Consistent competition from a mortgage broker is better for everybody in our industry. So on the front, our initial approval process, for underwriting is 2 days or less. Our conditions are reviewed in 1 day or less, and that's replicable, it's scalable. We're doing that across, nearly $20 billion a month in volume. We have a 9,000 person team dedicated to being overstaffed by design. We don't want that to change. So we have something that's dependable. That's how we hit an average, CTC of 12 and a half days, right? For those of you not very familiar with the mortgage process, there's, one critical piece that's still a differentiator for us, but TRID is one of our big regulatory, pieces of legislation. We actually allow our broker partners like Josh to get the initial CD out right at that initial approval. So within 2-3 days of your loan going into, application status, going into contract, that cooling period that can delay your closing, mess with a lock, all the stress that normally is associated with the back end of a mortgage process is off the table. So that's a huge lift, and saves quite a few gray hairs in the process.
Yeah, and it's a big control piece as well, because there's still lenders out there that are pretty archaic in their technology and like the way they've advanced or haven't advanced, so to say. But I know lenders that still get clear to close and then they have to send the CD out for you, right? So Josh provides a few things up front and the CD is going to automatically send itself out. So TRID's completely negated and out of the way up front. So you're never waiting, like we were already waiting for this clear to close, and now we have to wait 3 days from a mandated, government-backed law, which now you have to explain to the borrower. Now you have to explain to the listing agent, the sellers, and it's just, it completely eliminates any of that happening towards the end of the process.
We also offer easy findings, right? This is something on the front end for Oscar and Josh and for your buyers. It's basically hooked on phonics for mortgage underwriting, right? We take these complicated automated underwriting, findings from Fannie Mae and Freddie Mac, and we simplify it. We make it a human language, right? We make it so there's just a checklist of here's what the underwriter's going to want when they see your file. That way they can get that right up front, if they even need to get it, because we have dockless income and asset verification technology, sign, like everything you could possibly want to simplify things right there. And in the event that things get a little hairy, we have a system built to put everybody kind of on like a shot clock, right? It's client request. Escalations are a huge priority of us. We have the highest net promoter score, I believe, in the Fortune 1000 companies. Now that we're public, we can say stuff like that. And that's based on external satisfaction for any of our broker partners. Beating Disney, Amazon, Google, all these incredible companies, because we're invested in the success of our partners and making sure that when there is an issue, we're resolving it in 4 hours or less. Most of them handled in about 34 minutes or something. I don't know, that's math. But it gives us data too that we can track back and train on, because one of our pillars as a company is continuous improvement is essential for long-term success. We're constantly, personally, I'm on the road asking for feedback, trying to get better all the time. This is a tool that allows us to not only negate issues, but simultaneously improve. That's just built into the workflow and process that if you use it, great. If you don't use it, great. That means things went well. And then, one of the biggest advents that we have here is that back end, again, it's our UClose portal. This is a doc drawing portal that our broker partners have complete control over. You can get your clear to close on mortgage and have final docs for signing within 15 minutes. All you are doing is going in, checking a couple boxes, making sure vesting fees are all accurate relative to what your title agent says. Boom, done, there, printed, sent. Everybody's got it. No funding conditions, no awkward small talk at the closing table. You're spiking the football and having a party when you close a loan with Josh and Oscar. This is what it's all about, making things simple that for whatever reason never happened.
Well, yeah, because it goes back to the client experience as well. Because if you guys did a great job, you could get the loan CTC in 5 days. But if someone takes their lunch break to go close, right, now they're stuck at a title company for 4 hours waiting for those keys to be put in their hand. It's something that every one of you guys has absolutely ran into, and it's not an issue that you're ever going to have to worry about with Josh.
Yeah. So looking at the process here, right, the mortgage process in general, you have a pre-approval, right? We provide technology and confidence to our broker partners, to Josh, to ensure that any pre-approval and offer that comes from him is going to be vetted. We have a TBD scenario desk that will give you a TBD underwrite right on the front end. We'll talk a little bit more about this tech, but we even have an AI tech that allows him to do this at 11:30 at night on a Sunday and get a fully underwritten pre-approval as well for an offer that you put in. Our application process, our e-signature, our doc process takes minutes to disclose. The second you go into contract, they update the address in their system. They can have that in our portal with docs out for e-signature in minutes and signed and submitted to underwriting in minutes as well. It's simple, it's easy, it's fast, and it's consistent. And that's just the front, right? These are things that take days elsewhere. That's all handled and easy. Then again, underwriting, 2 days or less. We know what's going on. We're able to communicate with the people along the way. The approval comes out. Our team's calling out on it. Our team is asking if they missed something. Our team is making sure they understand and communicate the other side of this. Why is this condition here? Why are we looking for more? And if they can't provide a why, well, we have CR and they can challenge it directly. They're not hidden in some, back office and, hush, hush, stay away from them. They're too stressed out. No, we have underwriters that are pumping out 20 plus approvals a day right now. Industry average is like 4. And we have the lowest defect rating in the industry for our loan quality. These guys do an incredible job. They're knowledgeable. And if they aren't, we got the best underwriting leaders in the industry to help guide them where they need to go. And then again, closing. It's all about celebrating, and it's all about getting there simply and easily, using UClose, using the tools that drive us there. 5-step process for any purchase that comes through Josh is this. It's easy, it's simple, it's fast. So affordability is a pretty critical component of where we're going in this market, right? So moving away from the process and more about what he has access to. Over the last year, you guys know this firsthand, we've seen values go up. It's $130,000 in Utah alone, right? The average median income, according to HUD, only went up $1,400. Those two things do not correlate very well, okay? So what we offer is the ability to shrink that gap and provide buying power to the consumer. So if you have costs going up, but income isn't, you're not going to be able to save as much. So if you need to put less money down in order to get into a home, you can do that without sacrificing in the ways that have traditionally been associated with mortgage financing. The industry average, BPMI for this loan scenario here, 5% down, kind of a normal buyer. This is a under 45 DTI single bar, right? It's about $300 a month that they're tacking on to their mortgage payment. That inhibits their ability to qualify for more home. We have our own MI, call it instant MI, elite BPMI. This is actually something that doesn't require an additional underwrite and is not sacrificing rate. The effective rate, is significantly lower, but it also doesn't have an additional set of overlays like a lot of MI providers, and simplifies things for you borrowers and gives them the ability to qualify for more home. The differential here equates to more than doubling the average income increase from last year. It's more than $1,400 a year that they would be keeping in their pockets, but it gives them the ability to qualify for $28,000 more house just by doing this alone, just side by side, same scenario, right? So $28,000, that's another bedroom, it's a better neighborhood, it's another bathroom, it's a grotto, I have no idea. But at the end of the day, it's about the impact it has on the people, because the drivers, the inability to save that down payment are real human things. It's student loan debt, it's rent being ridiculous, and it's childcare expenses. And this is another opportunity that Josh has to provide for you guys more buying power without sacrificing service or anything, and get your buyers into a better house.
So one of the biggest things too with the income, like the median income not going up, right? There are a lot of things that are forgotten about in the industry. So when I'm not sure how familiar you guys are with specific products, but when you think 3% down, you always think home ready or home possible if you're a mortgage broker.
Income limits, constraints, complexity.
Impossible to qualify for, right? And with the income not going up, that means you're going to have 2 borrowers. So now if you combine two $40,000 a year individuals on a loan, now you're at 80 and the income limit happens to be 78. So those aren't available for most individuals anymore. However, there is a first-time homebuyer program that's completely forgotten about. And the only requirement is that at least one of the borrowers on the loan has to be considered a first-time homebuyer. That allows them to put 3% down, still with the discounted MI, no income limit requirements, and their down payment, their closing costs, everything about us. We don't have any gift restraints or overlays on any of our conventional loans. Actually, not even on VA loans.
You can give to the VA.
I mean, no. But you can do 100% gift so that the borrowers do not have to bring their own down payment, their own, closing cost funds to the table. They can get that completely eliminated. Now, innovating, again, to help people qualify for more, we have the cheaper BPMI, but one thing we recently just came out with is the MI Buster. So primary, second homes, it's obviously great for second home purchases, only because they already have to put 10% down anyways. But with 0.01 additional down, they can completely eliminate mortgage insurance. So it's not lender paid mortgage insurance either. It's not like built into the rate at an aggressive amount, right? So the interest rate's generally about 1/8 higher, but you're going to see that huge payment difference, and it's completely eliminated. And it's a proprietary program that only we own. We own the rights to it, and we service it for life. So if that buyer ever goes to purchase a new home, right, or they bought the primary, now they want to go purchase a second home, MI Buster again, and Josh is going to bring that client right back to you. 100% gift again on that product as well. So huge opportunities, and it's again helping these borrowers qualify for more homes, because one of the standard things you hear, like if you're not in this industry and you go to Thanksgiving or anything, ask your family members, hey, how do you avoid mortgage insurance? How much do you think you should put down? Like the commonality is still people think they need to put 20% down. So now we only have to put 10.01. So what are we doing with that leftover 10% they didn't have to put down? People forget about cost of living. You purchase a home, you forgot that you had to buy couches. You forgot you have to buy dishware, a new crib for your baby. Like these things add up so quickly. Or put that extra 10% into your kid's college fund. Invest it into the stock market, right? Have that money work for you instead of just dumping it into a home and watching it go away.
Yeah, like just to prove like practical application real quick. How do I unmute Brianna, can I pick on you for a sec?
Sure, I can unmute it right now.
Awesome. So Brianna and I did a loan together. We closed, 2 or 3 weeks ago. And her client had started with another mortgage broker, and he was over 46% DTI. So Brianna, once I started taking a look, what happened?
You saved him $20,000. He was having to put $40,000 down, and
Pulling out of his 401k.
Yeah, out of his 401k, and you were able to have him only put $20,000 down. So it's half the amount, and his payment was relatively the same. So
Yeah.
yeah,
And a big part of that is this last slide with that lower mortgage insurance. So
repeat that.
Okay, yeah. So he recently divorced guy trying to get into a house again. Other mortgage broker couldn't get him there. He was at like 49%. And so he was having to take money out of his 401k just to get 20% down, under DTI, all of that stuff. So because of this program, he was able to buy that same house, not lose any earnest money, only put 10.01% down, still around the same payment what he was going to be with the other guy, but actually get into the house. So this sounds really cool, and you did a great job presenting it. Sure, greatly built slide. Right?
He's so proud.
But practical application of it.
The scale.
Yeah,
That's a big part.
that's a big deal. Dude. Good for you, man. I'm really proud of you. Yeah, but practical application, this was a really great one with Brianna. And that guy was Adam, really, really excited about not having to take money out of his 401k, pay the cost to get it out. So realistically, it was more like 25,000 because of the fees associated with taking it out.
Taking it out of his 401k long term.
Yeah.
I mean,
Yeah. So long term even.
long term even more. Yeah, that's huge.
So anyways, this is a really cool product. They've also got, I do a lot of jumbo loans. And so jumbo loans with 10.01% down as well, which used to be 20% regardless. So,
But I mean, it goes back to, caring about the client and understanding their goals, right? So a lot of people, I mean, we're in the financial industry, all of us, like we know how to, we should all be pretty great at like saving money, right? Imagine if you just got divorced and then they were like, hey, time to empty out your retirement and you're giving away half your income on a monthly basis. Happy days, like absolutely not. So I mean, not only like he changed this man's life.
Well, and with Brianna too, I mean, she handled the whole situation really, really well. So good job.
Yeah, I mean, it's all about being able to provide options, right? At the end of the day, it's your service, it's Josh's service to you guys and to your borrowers to make sure they fit into some sort of bucket. So we're always trying to find innovative ways to make sure there's a funnel for everybody. That way you don't have to deal with the situations. I mean, it frustrates me a lot where you'll see loan officers where they're still like qualifying FHA borrowers with 3.5% down at 56.9% DTI, completely wiping out their bank account. I mean, imagine the strain that puts on somebody, because at home, if you're buying a house, somebody in that house is pressuring the other person to buy that house. So now you're out of money and you're getting some pressure at home. It's just not a great thing. So we provide all these different options for you guys to be able to compete no matter what the situation is and be light years ahead of the rest of the industry.
The other thing that this one does real quick is, sorry, this is just practical application. So a lot of first-time home buyers right now, right? So by county, there's that maximum loan limit for like home ready, home possible. So they can only make so much money per county. And this still allows us to put 3% down, get them into that house irregardless of their income.
Exactly.
So
Yeah.
that's been super helpful as well.
It's constantly overlooked and an option that's there. Going back to, what the market's doing with MI Buster, but innovation is throughout that. So we have the AUS back jumbo where it's treated exactly like a conventional loan. We use DU on it. There's very few overlays. It's very simple. We also have an interest only jumbo, for your real high end borrowers. And what's crazy about that, and I used to originate a lot of these, it's a fixed rate interest only product. That's not normal. That's one of the craziest things I've seen. Those are all ARMs in general. So that's a huge opportunity, but we're going to continue to invest in product lines that find the borrower segments that you guys need access to and need simple financing for.
You just gotta tap on this.
Tap a
Square.
there. Oh, there we go. Yeah. Okay. So again, being a technology company, being what who we are and what we're invested in providing for our partners, I want to touch a little bit on this and how our system really works, right? The experience that we provide with the technology and the process that we have for our broker partners is focused on growing your business and helping you retain it. Again, we have no retail presence. It's all about delivering it back to you. When you retain your clients, your profitability skyrockets. Incremental gains in retention drive this. This is data from Deloitte, from Salesforce, from Adobe, just in regards to retention. Personalizing the experience that they have, giving them an experience that makes them feel like a person as opposed to a transaction, a number, a buyer. I mean, just generic moniker, not that's bad word, actually increases your chances of retention by 44%. If you don't provide some level of personalization, they're actually more likely to not work with you again. They're going to look for an alternative. They're going to go down the road because maybe they think that experience is different, whether it is or not. And the savvier borrowers, the high-end borrowers in general pay for service. So consumers are even willing to pay a premium for personalization, for the ability to feel like they were given something that somebody else wasn't. Historically, that's tied to, I got the lowest rate, It's not about that. Lowest rate, I mean, cool. I mean, the cheapest car does not drive, right? But at the end of the day, it comes down to this. We have the ability to provide the ultimate mortgage loan experience. And he's kind of restructured, so I apologize for the overlap. We have a combination on our platform of over 7 million different rate, term, and lock combinations. We can completely customize the mortgage to the individual borrower, the rate all the way down to the 1,000th position. You can get a 3.214 mortgage on a 28-year term, lock it in for 18 days with Josh and close that, right? We will never make it so they're leaving money on the table. you negotiate seller concessions, we'll buy the rate down by $27 if that's what's left over. Probably result in, 2000s getting better, but it's there. Or if you need to get under 45% DTI to get approval, you don't need to jump to a significantly more expensive rate by being beholden to the typical rate sheet 8s, right? That are out there. And then ultimately probably sacrificing cash in hand. Funds to close are going to skyrocket. It's not like those buckets are linear. If you go from 3 1/4 to 3 1/8 on a given day, that could be a cost of $4,000 to the consumer. It's ridiculous. We can make sure that they get exactly where they need to be to qualify for the exact amount that they need in order to get in the exact home that you found them. And that's going to provide an experience that your buyers remember. They may not remember the interest rate, but they will remember that their loan was custom built to them, just like my suit was built to me. And I keep going back there, even though it costs way more than like, Macy's discount rack, which I used to shop at.
Yeah, I'm too sure. It's terrible.
So with that in mind, it is about helping you retain your clients through providing an experience that's unmatched. When you close a primary purchase with Josh, with Ultimate Home Lending, we provide a custom closing gift to your clients. It's normally a cutting board with their name on it when they bought the home. So when they have the housewarming party, they're not trying to bust out an LE or bank statement, mortgage statement, showing what rate they got. They're talking about the job you did and how great it was working with you while they're cutting up, cheese or something like that on the cutting board, whatever they're doing, right?
Charcuterie.
Yeah, charcuterie.
Jake is pretty fancy.
I love charcuterie. Good cheeses, some olives.
I thought Oscar was the one that spoke French. That's impressive.
Oscar loves charcuterie.
But that's free. That's part of making sure that the experience is set apart when you partner with Josh. That's part of making sure these clients remember you. So no matter what, the drip marketing, whatever comes through that's reminding them of you on the back end, they have that positive memory, right? And so with that said too, we don't have any retail presence, but we're heavily invested in our broker partners. So we have a proprietary CRM on the back end that's designed to have 8 different touch points for any loan delivered. It's credit trigger leads, MLS trigger leads, equity leads, anything you can think of generally speaking that could result in a conversation with a borrower that allows Josh to stay top of mind and redeliver these clients right back to you. So if all of a sudden they go on the market and you didn't see that, well, guess what? We get in touch with them and buy the house or maybe take over the listing. I don't know. Or their credit gets pulled. Oh yeah, you know what? We were just, on vacation up at Bear Lake and was talking to an agent up there and I was thinking about buying a house. Boom, get that pre-qual going, get you another deal, whatever it might be. Hey, happy
And my
birthday.
job, right, is to get that right back to the agent I work with.
Yeah.
Right, so having those triggers is huge to be able to make sure I get the client back to you.
That's it.
And one thing on that too, we're all about like sensory overloading, right? Because you'll never see the name UWM if you're a borrower, unless it's on your mortgage statement. But like during the process, for example, when the loan goes into underwriting, when the loan gets initially approved, when the loan's clear to close, it's like kind of looks like a board game, right? It's just a little video that goes out to the borrower. Hey, congratulations, your loan's approved by your mortgage guy, Josh, and your real estate agent. So it's not only propping him out, but it's also designed to prop you guys out as well. So just continuously keeping your name in front of them the entire time, making you guys stay top of mind.
We have those journey videos positioned throughout the process, all the way through to servicing, so they know where to make their payment, how to set up, their, auto draft. Even on the servicing statement, it has Ultimate Home Lending Josh on there, right? So that they remember them if they're, getting physical banks, their, servicing statements still and not just online like most people. This is the platform that Josh is a part of. This is the residual value. When you deliver a loan to Josh, our system is set up to make sure it comes back to you. When you close a loan with a mortgage broker, on average, you get, I think it's 0.96 more referrals. And Matt will say this in the Wednesday morning meeting 8 more times, and I'm sure we'll be about the same statistics, but per closing, right? So you're gonna get one just working with a mortgage broker. The mortgage broker works with UWM, Josh does for 80% of his business, maybe more, I have no idea. More, good job, Jake. You actually average 2.1 referrals, right? More than 2 referrals per closing. If you happen to be in that jumbo segment, it skyrockets. So it's like 3.4. And all that is opportunity for your business to grow too. The reason that people refer business to brokers is because it's faster, it's easier, it's cheaper. The only reason they don't is because they don't know. And education is a critical component of that. That's why we're here today, is to make sure you guys know it's not just Josh out there on social media and talking to you at Top Golf, explaining what he does and then showing you what he does when given that opportunity. This is the truth. We're funding over $20 billion a month, as a company with no retail presence whatsoever. We are the largest purchase lender in the country by a significant clip, with an average closing speed of, like I said, 12.5, may have ticked up thanks to appraisers. Maybe get some lobbyists out there to simplify the licensing process for them and get some more in the market. But at the end of the day, it is simply about that. It's about growth. It's about opportunity for you, and making sure that we provide that platform and continue to push forward and invest in innovation that'll drive the industry forward. So, a couple things that he has access to and that you have access to as a result. We touched on one already, but the source, faster, easier, cheaper. We're looking for incremental gains where we can. So the source is actually an AI-based learning search platform for guidelines and anything process related. In the event that Jake goes on vacation to Disney World again, it's like 4 times a year now. He's got his Mickey socks going, and he needs an answer. It's there, but it also learns what you're searching. It understands your market as a result, and it'll drive updates to you whenever you go and search that, because it's AI based, right? Speaking of AI, a huge investment, and this is something nobody has and nobody is doing, is Bolt. This is an underwriting portal. In 15 minutes, you can have a fully underwritten file where it reads and scans and understands and calculates income documentation and actually knows whether your borrower is approved or not. These are loans that are getting cleared to close in like 4 hours, and they're conventional loans. Self-employed borrowers can go through it without any hurdles. It's actually smarter than most LOs when it comes to self-employment. Self-included. Yeah.
No offense. No offense.
And then, something that is very robust, but really it's super simple as Blink. It's borrower link, right? This is, a point of sale system, but the best use of this is a white label for you, agent partners. It's a lead capture system, right? Where we can keep it as simple as we want, and then we can expand, all the different inputs in it, but ultimately we white label it to you, we white label it to Josh. We're invisible, but it's a digital lead collection system that allows you, say you're hosting, an open house, right? You can be there with an iPad, people put their information in that, just their name, phone number, boom. And all it has is your logo on there, and he's got all that lead capture for you. It's a little bit easier to work with than, pad of paper, right? And it's a better experience too. So people will remember that. So the 30 people that come through that open house that day, 29 of them are automatically plugged into, his, CRM system, and he's redelivering all of those pre-qualified borrowers to you as soon as he gets them on the horn. So you always have that capture. He's there to support that, and with no cost too. So he's nimble, his margins are low, and we're able to stay competitive and put you at the forefront of what you need from not just a lending partner standpoint, but just an overall market competitiveness standpoint. So you're as relevant and agile as possible.
And I know real estate agents love QR codes. He can customize it for you. It'll have your brand, your everything, and then you have your own little QR code for it. So like borrowers, if you put it on a big poster, a lot of people do sometimes. Borrowers just walk into the house, scan their QR code, scan your QR code, and then you just tell them, hey, this is going to go straight to my loan officer. If you're interested in this home, or if you don't get this home, they'll have you pre-approved in 24 hours. They'll follow up with you. So you guys are funneling business to get approved by Josh quickly on a Saturday, on a Sunday, on a holiday with ease.
And that allows you then to spend more time talking to the clients about their needs, talking about why they like this house, why they dislike this house, what they're looking for, doing what you're best at, right? Being a realtor, allowing him to focus on getting you more opportunity and making sure that you guys win more than ever. So that's what we're really invested in, and what we're here for is growing this community, helping you guys dominate. And 2022 is going to be a lot of fun, but partnering with somebody like Josh is going to make it, that much more fun. So we appreciate you guys giving us your ears for a few minutes, and if you have questions, happy to answer them. But thank you so much. We really appreciate it.
Thank you guys so much. I mean, it's really good to love the technology piece, right? We're going there. They have some really neat products too. So if you ever have a borrower with a unique situation, Like Noah and I are working on a deal, right, with one of their really nice custom homes that has some unique situations, and doing a loan with UWM for $3 million. And self-employed borrower, kind of tough, but can get it done through them. So is there anything like industry-wise that you guys aren't winning right now due to lending constraints, or like need a certain type of product that we can help with, Connor?
VA loans. What's
Yeah.
our thought process on VA loans?
Game time.
I mean,
They're, like 2.3% right now for VA loans, but like what's your specific?
Just speed
Question.
and efficiency on.
We're also the number one government lender in the nation too.
so
Basically,
speed and efficiency, you know, the appraiser issue is a big part of it, unfortunately. That's one of the things that restricts any transaction where there's an appraisal required. Now, in a purchase transaction for VA, unfortunately, you don't have the opportunity for an appraisal waiver, so you're not necessarily going to be able to work around that. And they have a very, I can't say restrictive because it's not that restrictive. It's just a much more thorough and standardized underwriting process that actually goes through VA separately. There's separate VA appraisal that have to work revisions and intersect with the appraiser on VA loans. The benefit of VA is that, you know, you're supporting a veteran. They're very aggressively priced. They're very simple. We do a ton of them. But that piece of the puzzle is what tends to wind up slowing it down. I mean, it's same turn times. I mean, actually, I think we are 3 days on initial for VA because we're really priced. So really aggressively.
So appraisal aside, you can still close quickly.
Very
absolutely,
quickly, yes.
absolutely. So that's, because I mean, I know a lot of the times the VA like pre-approvals, the VA offers are the harder ones to get accepted, which is not fair to the veterans. But at the end of the day, even if you can't get it accepted that way, just have the confidence knowing that if you do get it accepted, if you do get that VA approval, like that VA pre-approval offer accepted, we can knock it out for you.
Absolutely.
Like Josh and Oscar, they will dominate that one for you.
Yeah, I do a lot of VA loans. And one of the biggest things, so I just partnered with the Utah Highway Patrol, and a lot of them are veterans, and they're hiring 200 new UHP officers in 2022. And so I will pay for any veteran and first responders appraisal personally. So about $500 to $600 it saves them. But any UHP, any first responder or veteran, I'll pay for the appraisal. So that's a cool one. So be aware of those things, and please, I'd love to do those. I like helping them right now as well. So VA loans with them are awesome. Any other questions though before we get to food?
Any other feedback like that you guys have, like that you typically run into, like things that you might be
Well, that's
fearful
a
of?
quick question. So I've got one client coming from Australia, one coming from Canada. And so I'm trying to give them like how they can get their socials or whatever the fastest way. Do you guys have any special programs for people that have good credit where they're coming from?
So there's IDEN and foreign national programs that exist. We don't offer those right now, but we're actually fairly aggressive in regards to the interpretation on different visa types. So depending on the visas that they're coming over on, it's extremely feasible that they could just outright qualify for standard financing. So we would need to look at that with Josh and, you know,
I like the
see if
word
that's possible.
interpretation.
Well, Josh has a.
That's creative.
They're
Yes.
both done very well in their own countries, so that coming here is then.
Yeah, we have a lot of that actually. I mean, we're basically Canada's our next door neighbor, you know, so we have a lot of stuff we run into, you know, just in our market in Michigan, but I mean, down in Florida, it's all over.
Is interest rate a lot higher?
I couldn't speak to the ITIN programs. I have to imagine to some extent
They're
it
not
is.
fun.
Yeah, that's
They're
going
not
through
fun.
like a non-QM.
So we heard that it's
Yeah.
not good to have the ITN versus.
Yeah,
just
you're like
going and
four-
getting a
four
social
percent.
There's only
So-
specific- there's only specific lenders that'll actually do them.
Yeah.
And I mean, just the lender's process itself. I mean, most lenders don't really invest too much in technology because they don't see a need for it, which ultimately slows down the process. So like I have a girl, she just started originating last year. She has 15 loans a month. She's a killer. But I mean, the reality is like she can get a loan done with UWM in 10 days, but like an I-10 loan still takes her 6, no matter what. Like it's it's kind of the inevitable, but it might be good for people that are coming over from Australia. I mean, I'm sure the pricing is probably.
But
Yeah,
when you said visa, are you, those are the same
there's
thing,
so
right?
many, no, so they're not always, right? So there's a number of different visa types that actually do qualify for conventional or even FHA financing. It would just depend on what they're coming over as. I think it's an I-696 or something like that form. There's a couple of different form types. We can dig in with Josh if you give him a couple of the details and get you specifics, because it's not like a rattle off type of thing most of the time.
The
But
biggest thing is the
yeah,
interest rate,
If-
like
if-
they're
yeah.
sensitive to
if
that.
they get,
right?
do they have an EAD?
They're just getting here, and so they
Okay.
just met with the visa department or something today. And
So they'll
then-
have a lot of information we
Yeah.
can dig
This is a
into.
primary residence though.
Yes.
There's really no
Jobs
basis.
here.
It's like four-ish.
H1B, E2, C33. I mean, C33 is like the worst. I mean, we'll do a C3.
Yeah, that one migrates a lot, though. That's
Yeah,
that's
way
DACA.
too much.
Yeah,
Maybe
you can do an
6%.
FHA
I know.
Yeah, exactly.
It flip flops with FHA every like 8 months, so it seems like, no, whatever, that's.
We do a lot,
Nerd lore.
we do have a lot of options for visas and like EAD cards, so.
And we also have access to a lot of great minds, so we don't do ITINs, right, if they don't qualify for conventional financing with the visa, but we can find out who's doing a decent job
Yeah.
and at least get you positioned with them
Yeah,
for Josh.
That's what they did for me on my last EIN.
Okay.
So
We really, one of the things that's also kind of weird about us is we don't want every loan you guys do. We want to be there. We want to be the backbone and the infrastructure for growth. We want 80-90%. That's the market, the pool we play on, conventional, jumbo, FHA, VA, USDA. I mean, we even do manufactured now. But at the end of the day, we're not going to be able to do everything as well as we've done it. We can't do everything all the time. But if we provide the speed and scalability to our partners, then they can do a better job for those other loans, even if the other lenders aren't doing a good job for you. So we try and find out from our partners, if I can't do this, 580 FICO, VA deal, who's doing a good job? Is it Freedom right now? Is it Carrington? Who takes care of you? Who's the best right now? Because Josh has a loan and he's not sure who to put it with because he didn't do anything in that bucket, but he has to take care of them. Or the ITIN in this case, if it is, under that bucket, I'll call my guys in South Florida that do a ton of it, figure out who's actually executing.
thank you. If you have any other questions, we'll be around for the next little bit. Let's grab food, but thanks.
Hey,
again.
Josh, quick question.
Yeah.
I know we got a couple other states on Zoom.
Yeah.
Washington, Nevada. What other states can you close in?
Right now, just Utah,
Okay.
but working on Arizona, Oregon, Florida, maybe Idaho. It's a little harder.
Talked actually, Jacinda and I talked about Nevada as well.
Yeah, and Nevada.
Yeah,
Washington too? Did I hear you say
I'd
Washington?
love to. I have 3 in-laws that live there, so just gotta get 3 new loans in Washington. So
there you go.
Start licensing.
Kathy.
Yeah.
Our team will help you get licensed in those states.
Cool.
We'll provide you everything. Yeah.
We got it covered,
Yeah.
yeah, but we can help you guys expand. And we're in the process of getting it all rolling for you guys. Right now is a fun time for MLOs, it's renewal time. And everybody's a little backed up. getting
Everybody
that
did
done.
pretty good this year, though.
Aside
So I
from-
was very proud of the loan officer.
Yeah, so, but it doesn't mean the states are doing good. So the people processing it take their time.
Let's grab lunch.
Please.
And thank you again.
Thanks,
Jeff,
guys.
filling in for
Thank you.
us.
Thank you all.
Good stuff. Hey, thanks for sticking with us, guys.
Thank you.
Yes, thank you for me too. Thank you.
Okay, I see you tomorrow on tomorrow's training, huh? 11 a.m.
Okay, see you tomorrow.
Try to
Okay,
be
see
there.
ya.
Yep.
He always still got 150 on his condo. Always up to